Debbie Bell-Hosking for Finextra TV here at Sibos in London. I'm talking to Vinay Mendonca of HSBC and we're talking trade. Hello Vinay.
Hi.
We're talking trade. I think the question has to be is how is the industry leveraging technology to improve world trade?
Sure. I think for the first time in many years, there has been collaboration across the different players in trade to digitize it and make it simpler, safer and faster for corporates. So this is really about the shipping industry, logistics, the regulators, insurers, customs, ports, all of them, and the banks. So as you can see, it's quite a complex mix. I think the reason why we're finally seeing momentum is because we've kind of broken through the silos, and using distributed ledger technology, we're able to actually come together to help and digitize trade. The benefits of that and how it helps world trade is, one is if it makes trade simpler and safer, gets rid of the paper, it's less riskier, it's faster. So when it's faster, you can actually trade more, so the turnover grows. And then the final aspect, which is really important, is there is about a $1.5, $1.6 trillion trade finance gap that the Asia Development Bank calls out. So there are SMEs out there in emerging markets that are not having access to trade finance, and because of that, they are not able to trade. Getting trade finance to them through better digital means, reducing the cost, will help access trade finance and also then push up societal development and overall welfare as well, right? So the digitization really has a very strong agenda linked to getting trade finance out there more accessible.
And what is the status of blockchain developments and
Sure.
what impact is it having on trade?
Sure. So I think about a few years ago, it was blockchain, or as I'll call it, distributed ledger, which is the more technical name for it, was a solution looking for problems to find. I think where we are now over the past 3 or 4 years is we made some really practical commercial learnings on how to use distributed ledger. So where we are right now is there are platforms that have been created for both documentary trade as well as open account trade terms. So that's in play. We've done transactions already on these with number of customers, different currencies, different corridors, different industries. So the proof has been kind of tested. Customers clearly see value in them because of, like I said, either it helps in taking out the paper and the cost, or then it helps make trade faster so they can trade more. So they're seeing the benefit. However, there's a long way to go still. So it's taken time, and we always remind ourselves about the container, which we see around everywhere, the container that carries stuff. Standardizing that container took several years, whether there was the trucks, the roads, the ports, the ships, the warehouses, the cranes, everybody had to move around a standard version of the container. And I think that's something where I think distributed ledger here still has some years to go. The key challenges are, how can we scale up now? So everybody's done a few transactions. How can we scale up? And that's where we need a few things like digital standards. We need the regulations to come into play to support that. And we then need to lower the entry barriers for banks and customers alike to join as well.
So there has been a lot of investment in changing the way trade is done.
Yeah.
Are corporates seeing the benefits?
So definitely, and I think we jump generally to distributed ledger and blockchain, but I think if you just go in kind of more sequential way, they use more digital channels now. So that's less paper they have to deal with, so that's a benefit already. They're using self-serve tools. So a very easy example I would give was, we have a mobile app on a trade tracker, we call it. Our clients can go in and check the status of their transactions so they know what's happened, what's happening next. But they can click a link and then actually see where the trade documents linked to that transaction are. So they can, using a logistics link, we can actually tell them where the documents are. And then we put a third dimension to it. When they click it, we can even tell them where the ship is, where their container and their goods are on a map. So you can actually tell them, here's where your container is. So in a single self-service tool, we've given them something which otherwise they would have to call 3 different sets of people. They'd have to go into 3 different websites, query it. You've now given that power to them. So it's quite simple and quite easy for them. That's one example of a benefit. The other really big benefit is, the point on speed. A letter of credit normally takes about 5 to 10 days on the export leg to conclude because of the time the paper moves from the seller to the bank to the other bank and so on. With these digital platforms, we've proven that the transaction can be done in less than 24 hours with time zones. That is huge for a corporate because A, they're receiving funds faster, That's really important for them. But I think the second is, like I said, when they get paid sooner, they can ship more goods. So they can ship more to the same counterparty. And that's the benefit they see where the trade turnover can grow. And the final aspect I'll say is, like I said, can we get lending to more customers by using digital tools? Because the conventional way of lending, where we ask for balance sheets, profit and loss, statements, the cash flows, it takes time, it's cumbersome, and it's quite an expensive and lengthy process. If we had data from our client systems, we knew where the goods were, we knew what the buyer said, the seller said, we have that visibility. Against that data, we can take a view and decide how much we want to lend. So we can get more trade finance out there, and that's a huge value. The fintechs in the space have kind of spurred the banks on to innovate and get some of these solutions.
And do banks and corporates realize how much investment needs to be made to see benefits?
I think they're learning it. I think the initial few banks and corporates who worked around this have realized, we at HSBC we're leading in trade, so we realize we have to do R&D to make this happen. But from here on, the idea really is to keep the entry barrier as low as possible for banks and corporates to join. So what we need to do is have tools that make it very easy for a bank system to talk to some of these digital platforms, for client systems to talk to these digital platforms. So Sibos is a great place because here we're able to get the different vendors who provide systems either to the buyers, sellers, or the banks, and we say, can you create APIs or can you create tools that help for direct connectivity, easy connectivity onto these systems? So that's something where we want to keep the entry barrier low. Another really important point is none of these platforms are being put in there with the intent to be money spinners. They very much viewed as utilities to make trade simpler, safer, faster, and then the banks would see a higher volume, clients would be able to see higher volume. So I think with that in mind, the idea really is to keep the entry barrier low. It's also about keeping things like making the rule books simple and easy. If we start reinventing new rules and put out new rule books, that's going to dissuade folks to join. They would be happy to know, things like UCP, which ICC has already issued, could we leverage those instead?
Vinay, thank you. It's really interesting, and enjoy the rest of your conversations at Sibos.
Thank you so much. Thanks a lot.